This is a podcast from the Office for National Statistics covering measures of economic well-being. For a transcript, email info@ons.gov.uk. Gross Domestic Product, or GDP, is a measure of the total economic activity in a region. Here we will look at GDP per head, that is, GDP of a country divided by the total population of the country. Here is GDP per head for the UK over the past 40 years. We can see that GDP per head has increased considerably over the period. Using GDP per head to represent well-being, the UK ranks 15th amongst a sample of OECD countries. International rankings here are based on 2008 data, as this is the last year for which full data are available for all countries. The UK GDP per head is nearly 40% that of Luxembourg, who rank top. UK GDP per head is also lower than that of the US, but similar to that of France and Germany. GDP was designed to measure the production of an economy, not national well-being. However, for many years, GDP per head has been used as a proxy for well-being because increases in GDP have been associated with increases in other measures of well-being. For example, life expectancy. GDP has several limitations as a measure of well-being. An overview of the weaknesses of GDP as a measure of well-being can be seen in this podcast. Although these criticisms can also be applied to other measures of national income, we get a more complete view of well-being by considering other measures of national income in conjunction with GDP. Here we will look at three alternative measures of national income. Firstly, net domestic product, which also considers the wear and tear of machinery, buildings and other capital products used up in the production process. This more accurately describes the new wealth created during the period. Secondly, gross national income, which accounts for the cross-border ownership of economic assets of a national of a particular country. For example, a person that works in one country and lives in another, or the rental income on a property abroad. Gross national income gives a fuller indication of the resources available to nationals of that country. Finally, net national income, which combines these two adjustments. We will now look at the different international rankings for each of these measures. As previously mentioned, looking at GDP per capita, the UK ranks 15th. However, since the UK has one of the lowest rates of capital consumption in the OECD, using NDP, the UK improves to 12th, higher than Finland, Germany and Belgium that ranked higher using GDP per head. As with NDP, when comparing GNI per head, the UK ranks 12th. However, the gap between the UK and Luxembourg, ranked first, falls. In part, this reflects the earnings of people who work in Luxembourg but live in neighbouring countries. Finally, using NNI, the UK is ranked 7th. The use of different national accounts indicators to represent countries' economic well-being produces different rankings depending on which indicator is used. It can be seen that the adjustments to make national income better reflect national well-being actually improve how the UK ranks internationally. It emerges that it is necessary to give some national accounts indicators other than GDP some consideration when looking at economic well-being. The second part of this podcast looks at measures of household income. Households have the choice of improving current welfare by allocating resources to consumption or improving welfare by saving and wealth accumulation. These welfare decisions are not reflected in measures of national income. Household disposable income provides a measure of income available to households to spend or save for the future. However, people receive satisfaction from spending rather than income. Since the decision to either spend or save income may vary across nations, disposable income may not fully indicate the economic well-being of a country. Therefore, we must also consider household final consumption expenditure, the amount households spend on goods and services. Finally, we will also consider household actual final consumption expenditure, which additionally includes government spending on households. For example, the provision of health and education services. As with the national income measures, we will now look at the different international rankings for each of these measures, considering the implications for how the UK fares internationally. Looking at household gross disposable income per head, the UK ranks 9th in the OECD, and the US knocks Luxembourg off the top position. Using household final consumption expenditure per head, the UK ranks 5th, with consumption slightly over 2/3 that of the US with the highest. The changes in the ranking here represent the different countries' spending and saving decisions. The improvement in the rankings of the UK by this measure represents the consumption-led nature of the UK economy over the past decade. Alternatively, we could look at household actual final consumption expenditure per head, accounting for government spending on households. Using household actual final consumption expenditure per head to rank OECD countries, the UK ranks 4th, and the gap between the UK and the US is reduced, with the UK having consumption of about 80% that of the USA. The use of different national accounts indicators to represent countries' economic well-being produces different rankings depending on which indicator is used. It can be seen that the adjustments to make national income a better measure of national well-being actually improve how the UK ranks internationally. In addition, in international comparisons of well-being against the same group of countries, the UK fares better when household measures rather than national income measures are considered.